Welcome to This Week in South Carolina. I'm Gavin Jackson. With the holidays fast approaching, it's time for travel and shopping. Will inflation and supply chain issues affect the season? Laura Ullrich, regional economist of the Federal Reserve Bank of Richmond, has the latest on the economy. But first, with the passing of long-serving Senate Finance Chairman Hugh Leatherman, we talk with former Florence mayor on the impact he had not only on Florence County, but the entire state. Stephen Wukela, thanks for joining us.
Thanks for having me, Gavin.
So, Stephen, Mr. Mayor, that's how I know you. That's how I covered you when I was in Florence from 2011 to 2015. I just want to ask you a little bit about the legacy of, obviously, the late Senator Hugh Leatherman. You worked with him very closely. I covered him as well a lot, at the Florence level and at the state level. And I saw a lot of the progress that you two accomplished, specifically in Florence. And I want you to maybe kind of tell folks about just what that relationship was like with you and the late senator, and how he helped get things accomplished with you and others in the Florence area.
Well, what is lost by a lot of folks when they talk about our relationship, he and I, is they forget that I ran against him for Senate in 2004, and it was a hotly fought race. I think it was a very gentlemanly race. He beat me horribly, and then when I won the mayor's seat in 2008, I think something very unusual in politics happened. Chairman Leatherman reached out to me, who is staunchly conservative Republican, a very liberal Democrat, and he reached out to me and said, "Listen, you and I are not going to fight with one another. There are things that we need to accomplish in this community, and you and I are going to work together to accomplish those things for the people of Florence." Chairman Leatherman, in my experience, was not ideological in any way. He was, by education, he was an engineer. And so his nature was to kind of look at this machine or look at the system, figure out why it wasn't working or what it needed to work better and more efficiently, and to do that thing. And so he was very pragmatic, very strategic, and very much interested in getting things done, no matter whether it meant working with Democrats or Republicans or who. And that was our relationship going forward. That built into a close friendship. But we went about the business of trying to advance the city of Florence and the Florence County and the PD in a very practical way. And that was very, very rewarding for me personally. I don't think that exists very much at all in politics. It didn't then, and it exists even less now. But I tell you, just a sample of his impact. The last budget, I think it was $75 million in the last budget went to the Florence area, like 50 or 55 million to Francis Marion alone. That's on top of the 30 plus million that the legislature spent with his direction for early childhood education. And that's his last budget when the man was 90 years old. I mean, the impact he's had on the PD and the whole state really can't be overstated.
Yeah, especially when we look at your tenure from 2008 and then reelected in 2012. You really oversaw the transformation of downtown Florence, too, and he played a big role in that, too. And, whether it's tax credits for fixing up old buildings or just helping get some more money to the area. What was it like to really to make those changes? A lot of places are even trying to replicate what we saw in downtown Florence, like Aiken right now. How can they do that? Do they need to have a Senator Leatherman like we had or you all had in Florence?
Well, there's no question that it was an enormous benefit for a very young mayor to be able to sit in the room with someone of the stature and position in the state as Chairman Leatherman, Fred Carter, the president of Francis Marion University, former budget control director, who had those kinds of understandings of state government and government at large, Dr. Eddie Floyd from the Dr. Bruce and Lee Foundation, and for that group to be able to sit in a room, make decisions about what needed to be done to advance the community, and then do those things. And of course, that involved spending, all said, hundreds of millions of dollars, but it was done, I think, very collegially, very efficiently, and all at the direction and with the tutelage of Chairman Leatherman.
And Mayor, it took him decades to get to that power, right? Like, he was there for more than 40 years. He became chairman of the Finance Committee in 2001, and all the positions that came with that, the appointments that came with it, the power that came with that. But he was always, the butt of a lot of criticism from some governors like Sanford and Haley. But from a PD perspective, how significant was he, specifically when he's trying to put Florence, that area, on the map, when you're dealing with the Greenvilles of the state, the Columbias and the Charlestons of the state, who seem to get a lot of attention? There's a lot of power dynamics that go on in the state that people maybe don't realize, especially when you're a place like the PD.
Sure, I think there were two parts to that, Gavin. One part is the part you spoke to in your latter comments. The state had for so long kind of had this emphasis on Charleston and Columbia and Greenville. Naturally, these are large metropolitan areas in the city, and they got a lot of focus and they got a lot of attention. But when Chairman Leatherman rose to chairman of the Senate Finance Committee, he aggressively advanced the rural areas of the state, and the more rural areas, including the PD in Florence, naturally, given that's where he's from. He didn't make any excuses for that. They certainly hadn't made any excuses for advancing Greenville and Columbia and Charleston for years. And he did that aggressively. And of course, that ruffled some feathers around the state. But it should also be said that you can't overstate what he did throughout the state. I mean, what he did at the Port of Charleston and what he did, with Boeing. These are major state accomplishments. So he wasn't exclusively focused on the PD, but he certainly was aggressive in advancing the PD. And I think there's another part of that too, though, Gavin. I said in my comments earlier that Chairman Leatherman was not ideological. And I think frequently, and certainly true with Governor Haley, he ran into governors who were ideologically motivated and motivated to make decisions and advance policies on some ideological basis. That was not his motivation. He was practical. He wanted to see things accomplished. And that I think caused some tension. In addition to the fact that, frankly, this is a legislative state, and Chairman Leatherman, by my measure, I think had a lot more power and ability to get things done than most of the governors he dealt with.
Exactly, yeah. And Mayor, we have about 2 minutes left. I want to ask you about economic development, like you're saying. There was at one point the Florence area lost out to Spartanburg for a carbon fiber plant. And Chairman Leatherman said, any company that's coming to South Carolina, I want in our area. If our area does not fit you and your needs, I want you in South Carolina. I think that kind of encompasses what you're saying there in terms of how he attracted Boeing and Volvo and of course, the harbor deepening project and the new terminal down there in North Charleston that bears his name. So what was it like to see him work those deals? I mean, you saw some things come to the Florence area. How would he work? How would he politic to get things done in the state?
Well, Chairman Leatherman, I think, taught me very early the importance and the value of relationships and trust. I mean, that was the first thing he and I did was build relationship and trust, and you saw that in the Boeing deal. I think to a large extent that was made possible simply because of the relationships he had built with the executives at Boeing and the confidence that they had that he could produce in South Carolina what they needed to be successful in South Carolina. Certainly he had a focus on bringing jobs and industry to the PD. And I think he saw, from my perspective at the city, he saw the importance of the cultural amenities of Florence in order to attract industry. Very early on when I came to Florence, we lost a Starbucks manufacturing facilities. They were going to start processing coffee beans here in the States. We lost that to Augusta. And we lost that, I think, primarily because of the lack of amenities in the Florence area. And I think Chairman Leatherman saw downtown redevelopment, which you speak to, as an economic development necessity, and very much advanced that on that basis.
Definitely. Definitely an end of the era when we talk about his leadership and for not only the PD, but for the state. So that's former Florence Mayor Stephen J. Wukela. Thank you so much for your input, sir, and our thoughts and prayers are with the Leatherman family.
Thank you, Gavin. Good to see you.
Joining me now to discuss the economy is Laura Ullrich. She's a regional economist at the Federal Reserve Bank of Richmond. Laura, thanks for joining us.
Thanks for having me.
So, Laura, I want to talk to you about just what we're seeing right now in the economy, inflation, supply chain issues, everything that everyone's talking about right now. Specifically, a Washington Post ABC poll that found 70% of Americans rate the economy negatively, including 38% who said it is in poor condition. How would you rate the economy right now?
Yeah, so overall, the fundamentals of the economy have remained pretty strong through COVID. In terms of GDP, so that's the amount of final goods and services that are made in the United States in a year, we've recovered beyond pre-COVID levels, which is pretty amazing if you think about everything that's happened in the past, I guess, 19 or 20 months now at this point. There's other parts of the economy, though, that have not recovered as strongly. Employment is a good example of one that I think people are observing. They're seeing some of the labor shortages that are occurring. And actually, we're still 4.2 million jobs below where we were in February 2020 before COVID hit. So, and in addition to that, of course, as you mentioned in the intro, there are supply chain issues that are impacting some of the goods and services that we might want to purchase, right? You go to the grocery store today, there might be certain things that you can't find that you're used to seeing on the shelves. If you want to buy a new car, good luck right now because there's not a lot of cars on the lots. And so people are seeing this and when they're out and about every day. And so while overall the economy is doing well, it doesn't necessarily surprise me that there are people that are voicing frustrations.
And like you said, a multitude of issues, contributing to all this as well. Recovering from a pandemic, global supply chain issues. That's the world we live in these days too. And also want to look about, we saw jobs numbers be revised up from June to September by 626,000 jobs. So I mean, again, a lot happening there in the labor market, even though shortages are still being reported. But 401ks are strong, wages are strong. How do you mesh all that?
Yeah, it's really interesting, right? This is not typical, which makes sense because COVID's not typical, right? This is such a unique period of time in history, right? And we're living it in real time. And so looking at what's happened in the past can be helpful in some ways, but in others, this is so unique that what happens during a typical recession is not going to happen during this situation. So some of the things that are going on, it's just going to take some time to work through. There are certain industries where it's very obvious the ways in which they were impacted by COVID itself, right? Or decisions that were made during COVID. So, for example, rental car companies sold off a lot of their fleets during COVID because people weren't renting cars, so they sold the cars to make revenue. And now they're trying to buy new fleets of cars, and there's a car shortage, so it's very difficult for them to do that. So what happens? Price of rental cars goes up, right? That's going to work its way out. Because these are things that are directly related to COVID. But then there's other issues that we might not be able to trace that directly that might take a little longer.
Laura, talk about your role as a regional economist at the Federal Reserve Bank of Richmond. You're based in Charlotte, so you really have your finger on the pulse here in the Carolinas. Tell us what you do and who you're talking to and what's it like regionally right now.
Yeah, great question. So I am the regional economist for North and South Carolina, and you're correct. I'm based out of the Charlotte branch of the Federal Reserve Bank of Richmond. And what we try to do is get kind of a boots on the ground view of what's going on in the economy in real time. And as I mentioned a minute ago, things are so unique right now. And so it's important for us to gather as much data as we can. And some of that is quantitative, actual data from publicly available or privately available data sources. But then other outreach that we're doing and just having conversations with people is extraordinarily valuable to what we do too. So we talk to business leaders. Earlier this week, I talked to a South Carolina farmer. We talked to government officials. We talked to people all across the spectrum to try to get a feel for what they're experiencing in the economy and what consumers are experiencing in the economy.
And what's it like out there right now in the Carolinas?
Yeah, great question. So the Carolinas actually have recovered very well compared to the U.S. as a whole. So in the 5th District of the Federal Reserve, our district, South Carolina, our district is the Carolinas, Virginia, Maryland, West Virginia, and D.C. And the Carolinas are the only 2 states that are outperforming the U.S. as a whole in terms of employment growth and employment recovery. So South Carolina and North Carolina have seen relatively strong patterns of recovery, but we're also seeing some pretty significant labor shortages because of the growth that's occurring and because of some of the other issues going on in the economy. So while overall, I would say the economic health of the Carolinas is really strong, that doesn't mean things are just completely smooth out there right now, and that's why you're seeing people report.
Yeah, and
those
we
sorts.
heard from your boss, Tom Barkin, the president of the Federal Reserve Bank of Richmond, talking about this a few weeks ago, just about how the labor shortages have really been underpinning so much of the problems we're seeing out there, whether it's supply chain, not having enough truckers per se to maybe drive
Right.
freight across the country or regionally, and then also the pandemic we still need to recover from the pandemic. So is that really what you guys are looking at right now when we're talking about, the next 6 to 12 months when it comes to sustaining this kind of growth?
Yeah, labor, I'll be honest, this is kind of what I'm spending most of my time looking at right now because it's a very interesting situation. You mentioned people's 401k balances are strong and, the stock market has done well. Because of that, along with a lot of COVID-related we've seen a lot more people retire than we would expect in a normal year. So seen estimates that, maybe there were 1 million extra retirements this past year than what we would have expected. And we've got about 3 million people who've left the labor force. So that explains maybe a third of it. The other 2/3, though, it's a bit of a curiosity in terms of why have they left the market, what will get them back. And from most of the research I've done, I believe personally that it really is a complicated matrix of things that are going on, right? People do have concerns over COVID. Childcare is an issue. Schools have been an issue. People are more stressed than they've normally been, right? There's all these different things going on. And so, there are reasons why people are staying out of the labor force are complicated. So I think getting them back into the labor force may also be complicated. And so I think that's what we're seeing play out in real time is that some people who have left the labor force have not been as eager to re-enter as we might have thought.
Laura, I want to ask you about a somewhat of a maybe possibly emerging COVID-related phenomenon like you're talking about, the term wage price spiral. I know we're not in one right now, and the Federal Reserve Chairman himself has said he hasn't seen any evidence of one, but should we be concerned about this term, and really what does that look like? What is that?
So, wages are a big component into the price level of products, right? Because you're paying wages are an input into whatever you're making, whether that's a good or a service. And so one of the things that can drive inflation is wage growth. And especially because, I mentioned the example of like the rental cars, that's a price change that could adjust very quickly. But wage growth is stickier. And what do I mean by that? I mean, if you raise somebody's wages this year, if somebody was making $12 an hour and you raise them to 14, it's very difficult then to go back to that person and say, you know what, we're going to take you back down to 12, right? So once that increase happens, it tends to stick. So you can get in a situation where wages are going up and then prices are going up. We have seen wage growth, but we have not seen wage growth beyond what we've seen in the past. And so it's going to be really interesting to see what happens, I think, in the next year or so with wages. We are hearing from a lot of companies that they have increased lower level wages and wages for like entry level employees, but we're not necessarily seeing a lot of across the board significant wage increases yet.
Gotcha. And then along with that, we're talking about price increases, we're talking about inflation. Tell me about how concerned we should be about inflation when we saw those numbers come out for October, more than 6% year over year. Is this still going to be the transitory inflation that we heard so much about, or do you fear that this might be more long term at this point?
Yeah, so the example that I just gave a second ago about like the rental cars, that would be transitory, right? That's something that's temporary. The wages would be something that would be less likely to be transitory. What we're paying close attention to is kind of what segments of those price increases appear to be transitory and which don't. The Fed and Jay Powell, if you've watched his interviews and his testimony and listened to the comments from Tom Barkin and other Fed presidents, much of the price increases that we saw, especially earlier in the pandemic, appeared to be quite transitory. And that's true to some degree. But as we do see things like wages or rents, which also tend to be pretty sticky, when we see those increase, those are much less likely to be transitory. So, I would just say that the Federal Reserve, all 12 banks and the Board of Governors are paying very close attention to this. And I think it's a question mark still at this point because we need a little more time to see how this is going to play out.
And when you talk about inflation factors too, several Republican House members, some in our delegation, did not vote for the bipartisan infrastructure bill because they say that it could impact inflation, even though a lot of that spending is over several years. How do you see these big spending bills affecting inflation, if at all? Maybe even like the COVID relief money that we saw. We saw a couple $1 billion coming to our state as well. Will that affect inflation in any way that you can point to?
If you think back to, the people that are watching, if you took basic economics, when demand goes up, prices go up. When supply goes down, prices go up. And that's kind of what we're seeing right now. You make a good point about the government fiscal aid that came in last year. That increased demand for a lot of goods and services, right? People had more money to spend. We can see that in the data, and they spent it. And so that increased demand. And then we're seeing supply shortages and things because of supply chain issues, or just because the typical production didn't keep up with that higher demand. So, that can increase prices to some point, but that government fiscal aid it's not long-term sustaining, right? Those are one-time shocks. And so that would be an example of price changes that we would expect to be transitory, right? There's a one-time shock, maybe prices of certain things like used cars go up because there's a lot of people out there buying used cars because they have stimulus money and other maybe aid money that they've gotten. But then that will settle out now that the aid has ended. And we've seen that. We've seen where some of the data is showing there were these spikes, spikes in savings, spikes in spending, and now it's settled out a bit. So I don't expect it to cause long-term inflation.
Gotcha. But as a result of all those spikes too, we've seen, massive surpluses come into our state coffers, when it comes to tax revenue, and then also, $3 billion for the American Rescue Plan dollars that lawmakers will determine how to spend next year. What kind of advice would you give to policymakers right now when it comes to spending these surpluses, spending this money, this, some would call it transformational amounts of money?
Yeah, I agree that it's transformational and amounts. It has the potential to be transformational. Let me say that. I actually wrote a recent article on our website under the Regional Matters post that we do. You would find something I wrote on this topic. Exactly. This is one of the more unique things that happen this time, because normally during an economic downturn, state and local tax revenues are hurt significantly. And the money that came through from the CARES Act really was put in there because economists and politicians alike expected that to happen, because that's the normal pattern. But then we also had the tremendous fiscal support, and so we ended up seeing personal income spike, and state and local tax revenues went up as well. So to your point, we have large surpluses, and on top of it, all of this ARPA money from the second large stimulus bill. I think states are going to have to be, states and local governments are going to have to be really thoughtful about how they spend this money, because once again, these funds have to be spent by 2024. So there's a bit of a runway, but it's a short runway. And so you don't want to spend the money on things that require high levels of recurring revenue, because you don't have a recurring revenue stream from this, right? And so thinking about how do you spend this? I know at the state level, they're spending some of it to right size the unemployment program, insurance program. Thinking about deferred maintenance on government buildings, which I know in the state of South Carolina is a significant issue. Those are great ideas of how to do it. But there's already some examples of things that are really not the intent. There's I think it was in Wisconsin, a school district that used it to put in turf football fields. That's really not what this money is for, right? And also, I think we have to keep in mind that there are significant issues that have occurred due to COVID, and education is a space in which, that really K through 12 schools, and then some of the state colleges and universities and community colleges technical colleges across the state really have been significantly impacted. And so also thinking about how to fill those learning gaps is also just absolutely essential right now.
Yeah, Laura, we have about a minute left too, and I know you just mentioned that about education. They have a whole separate billions of dollars going for education alone too. But when we look at community colleges, the governor just proposed some ARPA money being spent to help, give scholarships to help get people into training for these high demand jobs. Advanced manufacturing, nursing, a lot of different things. And I know you just did some research on community colleges in the region, and South Carolina was one of the only ones, I think the only one, that actually had an uptick for fall 2021 when it came to enrollment. What's going on there when it comes to community colleges and the role they're playing in this whole situation?
Yeah, so nationwide since 2019, community college enrollment's down 14.4% overall. It's a real issue, and a lot of schools across the state of South Carolina have seen enrollment declines. And right now, we hear a lot about needing more truck drivers, needing more welders, needing more nurses, and that's the place where these people are trained. And so thinking about how to create programs that train people in the best, fastest way possible, right? Most efficient way possible. But also we have to think about the financial side of it. And historically, community colleges nationwide have gotten kind of the short end of the stick in terms of funding. And so I think thinking really about how to fund schools and also fund students in that space is extraordinarily important.
And Laura, 30 seconds. I know we just talked about all these things, but Thanksgiving's coming up. You'll be at your dining table talking to people about these issues. How should people maybe talk about these economic issues? What should people be telling folks about what's going on right now with the economy?
Yeah, I think there's so, as we started with, this is such a unique time. And, I often tell people, this is something down the road, we're going to have just extraordinary economic research done on this period of time, but we're living in it now. And so we're going to have to expect things to be a little bumpy at times, I think. But I think this also gives us the opportunity to look at some issues that have probably been existing for longer periods of time that have just been exacerbated by COVID. And with the resources that we have right now, maybe it's a good time to think about how to fix some of those issues.
Yeah, definitely unprecedented times. Well, thank you, Laura Ullrich. She's a regional economist at the Federal Reserve Bank of Richmond. Thanks.
Thanks for having me.
Stay up to date with the latest news throughout the week. Check out the South Carolina Lead. It's a podcast that I host twice a week, and you can find on southcarolinapublicradio.org or wherever you find podcasts. For South Carolina ETV, I'm Gavin Jackson. Be well, South Carolina.